Good afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Friday, March 4th, 2011. Saw some liquidation today in the grains. Stronger crude oil prices, a weaker dollar. I wouldn't call it significantly weaker, down just a little bit right now. But the weaker dollar, crude oil being up, really not helping the grains too much at all today, as we saw some profit taking come out of the corn. We saw a stronger move today in the wheat. Partially due to a purchase that was reported overnight. Only 50,000 metric tons of wheat sold from the U.S. But right now, anything you can do to get bullish. Technicals, fundamentals, these guys are going to spin it. Plus, you got a lot of spread trading going on as well. They may have been spreading the spreading the wheat against the corn here today as well. So where do we finish up? Well, we were down 8 3/4 in old crop May contract corn. 728 is where we finished up. We were off the highs by 14. All right, the markets did open up strong, but did see some selling come in very early today and had a real tough time recovering. Soybeans up 2 on the day in the May contract. 14.14 is where we settled off. That was 18 1/4 off the lows. So you can see where the beans and then the wheat also off their lows, 14 1/2. May contract settling at 832 1/4, up 8 3/4. So we saw a rebound in the wheat and the beans after significant pullbacks here shortly after the open. Again, there was export news coming out for old crop beans as well as some wheat here today. Also, rumor going around that China may be defaulting on some of the cargoes of beans that they've purchased from the U.S. Those, again, are just rumors right now, not enough to really hammer the market down today, but nonetheless, support was found. Crude oil right now, we're up 239, 104.30 in the nearby crude contract. The dollar down 6 1/2 right now at 76.43 as fighting intensifies over in Libya. There was also reports this morning that there was an oil field on fire in a town, that there was significant fighting going on between rebels and the government forces there in Libya. Starting to heat up out near the oil fields and oil refineries, the towns that do house those facilities. So keep a close eye on the Middle East, as we have been for several weeks now, as to where crude's going to be going, and the energies overall going higher off of the news coming from the Middle East. Over to livestock today, cattle. We were in the April contract down 15 cents. 114.05. That is 90 cents off of the high. All right, there was some aggressive buying that came in early to the cattle market with the strong cash sales we've seen this week, both in the north and the south. Higher cash prices on the meat, higher cash prices in the cattle themselves. Set us up for a higher open, but we saw liquidation today, probably profit taking. That's typical for a Friday. All right, over in the feeders, we were down 2 1/2, 129.95 March feeders. Hogs today down 17 1/2, 88.62 1/2. So feeder and hog contracts not moving too much today. The fat cattle market was in fact volatile to the downside primarily for most of the day. We did read a report this morning that there is an unofficial case of BSE up in Canada. A 6-year-old cow has not officially been recognized by the Canadian sources yet as actually having the disease, but I believe that's the first time, and I think I read 7 years or so that they've had an instance of BSE in Canada. Once that report becomes official, we will see most probably the results of that in the market, if any results come of it at all. But I do think it's important to note mad cow found up in one cow in Canada. So keep that in mind as we go forward, and we have a very strong cattle market here in the U.S. right now. That's about it for this week. We will be back in here on Monday. If you have any questions or would like to talk to a broker for the remainder of today, feel free to give us a call at 800-262-7538, or you can visit us on the web, www.allendale-inc.com. Thank you very much for tuning in today, and we'll talk to you again next week.